Hey everyone, welcome back to Stocks Telegraph, your go-to spot for the latest stock market trends and updates. If you're new here, hit that subscribe button and don't forget to turn on notifications so you never miss an update. Today, we've got something super exciting to talk about, New Holdings Limited, ticker symbol NU. This fintech company has been making waves in Latin America, and today, we're going to break down what's happening with the stock, how it's performing, and if it's a good investment right now. So stick around and let's dive in. All right, so let's kick things off with a quick rundown. New Holdings, or New Bank, was founded back in 2013, and since then, it's been growing like crazy. The company offers digital banking services across Latin America, including Brazil, Mexico, and Colombia, all through an app-based platform. It's really challenging the old-school banking model by focusing on low-cost, user-friendly services, and it's been attracting millions of customers. But the big question is, what does this mean for investors? And is New still a strong buy in 2025? Let's start with the basics. Where is the stock at right now? As of today, New Holdings is trading at $12.34 per share. Analysts are currently giving it a target price of $14.64, which means there's an upside of about 18.6%. That's a pretty solid potential for anyone looking to get in. And speaking of analysts, most of them are giving New a buy rating, sitting at a consensus of 2.38, which is a good sign that the experts are confident in its future growth. Now, if we zoom out and take a look at how the stock's been performing, it's been pretty impressive. Over the past year, the stock's gone up by nearly 38%. Even in the last month, it's up almost 19%. But, and here's the thing, it's still about 23% off its 52-week high, which could actually present a great opportunity for those of you looking to get in before it hits those highs again. Let's dive into the numbers a bit deeper though, because they really tell the story here. New Holdings is showing solid profitability. They've got a return on investment of almost 20%, a gross margin of 69%, and an operating margin of 26%. That tells us the company's operations are pretty efficient, and they're not just growing, they're making money along the way. And here's the kicker. Earnings per share. This year, New's EPS growth has been huge, up 76%. Next year, analysts are predicting another solid 38% growth. So, things are looking pretty good on the financial front, but what about their stock momentum? Well, currently, the stock's sitting 11% above its 20-day moving average, which could be an indicator that it's in bullish territory. In short, it's got some momentum behind it. All right, moving on. New Holdings is also making some strategic moves that investors should pay attention to. They recently led a $250 million Series D funding round for Time Group, a rapidly growing digital bank that operates in South Africa and the Philippines. This is big because it positions New as a minority shareholder in Time Group and shows that they're thinking globally. It's all part of their plan to expand beyond Latin America and continue shaking up the global fintech scene. Speaking of global expansion, let's zoom in on how New's doing in its home turf of Latin America. The company's been on a crazy growth streak, especially in Brazil, where it started out. In fact, it's now in Mexico and Colombia, and it's been gaining tons of new customers. Just last quarter, New added over 5 million new customers, bringing its total to a massive $109.7 million. And keep in mind, a huge chunk of Latin America's population is still unbanked or underbanked, so New's in the perfect position to fill that gap. Let's talk numbers again. New's revenue for third quarter was $2.9 billion, up 38% year over year. Net income jumped by 83%. These are really strong numbers for a fintech company, and they show that New's not just growing in size, it's improving its financial performance as well. Another thing to mention is New's unit economics. They've been able to increase revenue per active customer by 25% year over year, which is a great sign of long-term sustainability. And here's the thing, New's trading at a forward price-to-earnings ratio of 20.3, which is actually below its historical average and lower than the broader S&P 500. So it could be trading at a discount right now, which makes it even more appealing for long-term investors. Of course, no company is without its challenges, and New is no exception. They've faced some concerns, like rising credit delinquencies and a recent dip in stock price. Some analysts have raised caution flags about the risk of slower credit growth. And while Berkshire Hathaway reduced its stake in New, it's still an important investor to note. Warren Buffett's team doesn't make decisions lightly, and their backing of New shows they believe in its future. Despite these concerns, New's still in a strong position. They're expanding into new markets, diversifying their offerings, and leveraging the growing internet connectivity in Latin America. More people are using mobile internet, and that's opening the door for more customers to access digital banking services like those New offers. And let's not forget, New's already seen massive growth. In just the last year, they saw a 60% year-over-year increase in total deposits, which now stand at $28.3 billion. This is huge, and it speaks to the trust customers are putting in New's services. So, where does that leave us? New Holdings has clearly made its mark in the fintech world. With solid financials, a massive customer base, and an expanding presence in Latin America, it's in a great spot. But like any investment, there's some risk, especially with stock volatility and concerns about credit delinquencies. Still, if you're looking for growth potential and you're willing to handle a little risk, New could be a strong contender for your portfolio. That's all for today's deep dive into New Holdings. What do you think? Is NU a buy for you, or do the risks outweigh the rewards? Drop your thoughts in the comments below. We'd love to hear what you think. And if you enjoyed this video, make sure to give it a like, share it with your friends, and subscribe to the channel for more updates on the stock market. Thanks for watching, and we'll catch you in the next one.